Directors and officers, why some Canadian businesses are having a hard time getting D&O insurance. There are many global market trends that are putting pressure on directors and officers' insurance coverage. Thus, boards are challenged to find insurance coverage. These pressures have driven underwriters to exit the market, and those who stay are reducing their risks. For some Canadian companies, even getting $1 million in coverage can be challenging. Terry Hayes, Reliance Insurance D&O risk analyst, has researched and studied the market, bringing insight and strategies to many industry sectors such as mining. Reliance has a creative approach to helping companies get the appropriate D&O coverage, including multi-million-dollar coverages. Outside forces putting pressure on boards. Directors and officers often face complex situations, frequently out of the control of the company. That can lead to exposure, risk, and financial devastation. Over 32% of companies feel that D&O insurance is covered by other insurance policies, but that is often not the case. There are several business scenarios that can lead to challenges in finding not only adequate, but superior coverage for liability. Canadian public companies on Nasdaq. Once a public company is listed on the Nasdaq, the underwriter will reevaluate the D&O coverage. This often leads to a higher risk profile because of the litigious environment in the United States. Rapid business growth. When a company expands at a rapid pace, adding intellectual property, staff, equipment, or other resources can change the nature of the exposures. Competitor pressures. Competition can change the dynamic of how a company is operating in their respective market. It is imperative to understand that poaching staff or clients and stealing of intellectual property when employees jump from one competitor to another can lead to lawsuits from a competing company. Public versus private companies. If a company goes from private to public, it can affect the D&O coverage, deductibles, and statutory declaration. Public company D&O policies allow companies to choose their own defense counsel. This is one of the major reasons public D&O policies cost significantly more than private D&O policies. In a private company, the defense counsel is assigned by the insurer. Merger objection litigation. The frequency and average costs associated with merger objection litigation is increasing. These lawsuits represent a significant financial burden on the defendant companies and on their D&O insurers. Solutions for D&O insurance coverage. Angus Reid and Terry Hayes have recently worked with two well-known mining companies to usher through a complex solution for D&O insurance. 1. A lithium mining company with mining operations in the United States and a uranium mining company with a mine in Saskatchewan. Both had more than one challenge to contend with, including being listed on the Nasdaq Stock Exchange. First and foremost, the key to finding the right coverage is understanding the specific industry and carrying out due diligence within the markets, including precedents in court cases. A more common solution to overcome the barriers to getting the high-value coverage limits is to build a multi-carrier structure that spreads the risk, fills the gaps in coverage, and minimizes the underwriter's exposure. This is a complex negotiation working with clients and various partners. Next steps to evaluate D&O coverage. If your company is going through any changes and you need to review your D&O coverage, connect with our analyst to provide you with an evaluation and risk management recommendation. We have expertise in many key Canadian industries, including mining, manufacturing, and construction. Visit our website at www.reliance.ca.